Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MOHAWK Industries INC quarterly report. MOHAWK Industries provides a wide range of businesses and services across the globe. Some of its key offerings include flooring products, ceramic, porcelain, natural stone tiles, installation materials, broadloom carpets, carpet tiles, rugs and mats, carpet pads, laminates, medium-density fiberboards, wood floorings, vinyl tiles, and sheet vinyl. Roofing panels and insulation boards, mezzanine flooring products, decorative panels and chipboards, licensing of intellectual property to flooring manufacturers. The company sells its products under various brands, including American Olean, Daltile, MOHAWK, and Pergo, among others. Its services cater to a diverse range of customers, including home centers, residential builders, commercial contractors, and e-commerce retailers. MOHAWK Industries Inc.'s stock price drop. A year of challenges over the past year, MOHAWK Industries Inc.'s stock price has dropped by 8.97% due to a combination of factors affecting its performance. Weaker economic conditions and declining earnings have been major contributors, alongside pricing pressures, increased input costs, and challenges in the housing and remodeling markets. The company faced several headwinds throughout the year, including system implementation issues, unfavorable foreign exchange rates, and ongoing impacts from new order systems. Additionally, consumer confidence declined, and new global tariffs were introduced, adding to market uncertainty. MOHAWK Industries' quarterly results reflected these challenges, with mixed performances in Q1 2025 and underperformance in Q3 2025. The company cited weakening economic conditions, elevated input costs, soft housing demand, persistent inflation, and trade-related challenges as contributing factors to its decline. As of October 21, 2025, MOHAWK Industries shares were down 15.37% over the preceding 52-week period, indicating a significant negative trend throughout the year. The cumulative effect of these quarterly results and market conditions has collectively contributed to the stock price decrease. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the global ceramic segment, which saw a plus 4.2% growth in net sales due to favorable price and product mix, $91 million, and foreign exchange rates, $34 million. Additionally, Flooring Row experienced a 4.3% growth in NA and 2% growth in Row. On the other hand, revenue decline is primarily attributed to the ceramic flooring segment, minus 6.1% decline, which was affected by higher input costs, $63 million, and unfavorable price and product mix, $19 million. Similarly, Flooring NA experienced a decline due to higher input costs, $63 million, temporary plant shutdowns, $30 million, and restructuring costs, $24 million. The neutral/other category includes segments that saw mixed results, with some quarters experiencing growth while others declined. However, the economic downturn had an impact on seasonality across all segments. Net income decreased by $96.7 million in 2025 compared to 2024, a drop of 22.8%. This decline is attributed to several factors. Higher input costs and unfavorable price and product mix contributed significantly to the decrease. Additionally, temporary plant shutdowns had a negative impact on net income. The breakdown of net income by region reveals that global, ceramic flooring, NA flooring, and Row all experienced decreases in 2025 compared to 2024. The largest decline was seen in NA flooring, with a drop of 35%. Profit margins also decreased, as indicated by the decrease in net cash provided by operating activities from $736.9 million to $596.6 million. While productivity gains partially offset the decline, they were not enough to prevent the overall decrease in net income and profit margins. The company is indeed generating positive operating cash flow, as evident from its net cash provided by operating activities. Although there was a slight decline from $736.9 million in 2024 to $596.6 million in 2025, the figure remains substantial and indicates a healthy financial position for the company. The company's debt level has undergone significant changes in recent years. While short-term debt decreased substantially from $559.4 million to $175.6 million, long-term debt increased slightly from $1,677.4 million to $1,743.3 million. However, the total debt level saw a decrease from $2,236.8 million to $1,918.9 million. In terms of interest expenses, there has been a notable decline. Interest expense decreased from $61,200,000 to $35,200,000, and also from $38.6 million to $16.6 million. However, for the 3 and 9 months ended September 27, 2025, interest expenses increased by $0.4 million and $1.1 million respectively. The company's financial performance was mixed across various segments and regions in the recent period. Notably, global ceramic, flooring row, Latin America, and Europe showed significant growth, with increases of plus 5.2%, plus 4.2%, plus 2.7%, and plus 10% respectively. On the other hand, some areas underperformed. Flooring now experienced a decline of minus 3.9%, while the United States saw a decrease of minus 1.6%. The other category suffered the most, with a drop of minus 9.8%. These results indicate that the company's growth was concentrated in specific regions and segments, while others struggled to keep pace. Management's outlook: the company's financial performance is not indicative of year-end results. Management is assessing the impact of new accounting guidelines on its financial statements, which may have a significant effect on future reporting. Despite potential external challenges such as geopolitical conflicts and trade restrictions, the company remains confident due to its strong balance sheet. To mitigate risks, management plans to invest $480 million in 2025 on capacity expansion projects and cost reduction initiatives. This strategic move is expected to drive growth and improve financial performance. Overall, management's outlook suggests a cautious yet optimistic approach to navigating current market conditions while positioning the company for long-term success. Concerns about inventory buildup and supply chain disruption: the company is facing concerns regarding inventory buildup and potential supply chain disruption. The financial summary highlights a significant increase in finished goods and total inventories, indicating a potential issue with inventory management. Furthermore, the company's supply chain is vulnerable to disruptions due to various factors such as tariffs, conflicts in the Middle East region, inflation, and material availability issues. These challenges have already had an unfavorable impact on net earnings, particularly due to temporary plant shutdowns. That concludes the financial summary for MOHAWK Industries Inc. Feel free to comment below, and I will be happy to answer them when possible.